This ETF has a 322% distribution rate, and it's called BITK. Now, is this distribution rate real or is it just inflated? We're going to get into that in this video. This is a fairly new ETF. It's by Tuttle Capital, and it's an IBIT 0 days to expiry covered call ETF. And if you're not familiar with 0 days to expiry covered calls, they basically sell covered calls every single day that expire that same day. So they're not really holding any options overnight, and it's going to make premium or income every single day. And this is going to be a weekly paying ETF as well. So the primary investment objective of Tuttle Capital IBIT 0 DTE Covered Call ETF is to seek current income. And the second is going to provide capital appreciation. Now, there's usually not much capital appreciation with funds like this where it's 0 days to expiry, and especially covered calls, because you are limiting your upside, and that is why it's going to be a secondary objective. It's not going to be a main focus for capital appreciation. So a lot of people are not going to be liking that aspect of it. But we can take a look. We have about $2.8 million assets under management, which is very small. It's very new, and we're going to have a 0.95% expense ratio because that is the nature of a lot of covered call ETFs, especially 0 days to expiry, because they have to trade options every single day. Now, Tuttle Capital has a very weird ETFs. We can see they have, for at least in December of 2020, during the whole SPAC phase, they have SPCX, the SPAC and New Issue ETF. That's when basically a lot of companies were merging with the shell companies. And then we have Top Gun ETF, we have National Security Emerging Markets ETF, Daily 2 times Inverse Regional Banks. So they have a lot of weird, very niche ETFs, but this one probably will tailor to the majority of the people, which is a Bitcoin Covered Call ETF based off of IBIT. And IBIT is the iShares Bitcoin Trust ETF, basically going to track the price and movement of Bitcoin itself. It's the closest thing to the spot price. Now let's go back to BITK, look at the distributions, see what the holdings are, and is this a 322% distribution rate real or not? So we take a look at the distributions tab, we can see it is advertising an over 300% distribution rate, which is absolutely insane. It's gonna spark a lot of interest and as well as a lot of caution, because will this ETF have significant NAV erosion because of that? Or is it just a simple yield trap? So we can see the first distribution was for $1.50, which is insane. It's very high, but a lot of investors are going to have to take that with some caution because it's a very new ETF. This ETF started out at around $25 per share. And during that week, we can see it had a pretty good run up in the share price itself, all the way up to $27 per share before the payout of its distribution. Now, if you take a look at IBIT, what happened during that time frame? September 24 went from $66 per share all the way to $68 per share. So it did pretty good. It did actually match what happened with IBIT for BITK. So it does have that capital appreciation. Could this be a really good ETF for your portfolio? It's very new. It's only been out for 2 weeks now, September 24, 2025. And not many people are talking about this ETF. Not many people know exactly what it is or even familiar with Tuttle Capital. I know I haven't, but this has been sparking some interest because of that 300% distribution rate. And we can see 1.5 for that first distribution. This ETF pays out weekly, but we can also see the next week was $0.50. So it is a lower distribution for the next week. Now, based off of that $1.50 distribution, it is a 300% distribution rate. But if we're basing it off of this 50-cent distribution, that is only going to be 100% distribution rate. Because if we multiply 50 cents by 52 weeks for the forward yield, that would be about $26. for the year annualized. And if we compare that $26 against the $24 share price, that's going to be a little bit over 100% of distribution rate, which is still very solid. It's nothing close to that 300%, but you're getting a lot of weekly income as well as possibly some capital appreciation. We're not too sure. It's very new. There's a ton of risk involved with buying new ETFs, as well as something very new as Tuttle Capital IBIT 0 days to expiry covered call ETFs. Now, in the past week, it hasn't been doing too well. Of course, it drops from the distribution being paid out, but then we also have the share price decline because Bitcoin itself has been doing pretty bad in the past week. So that's why we're seeing a lower distribution of $0.50. So I think that if we can see Bitcoin itself doing very good and having a nice bull rally, possibly this ETF will do well as well. Because remember, all covered call ETFs, you want the market to go up. Even though you are capping your upside, you do not want the underlying to drop because then the NAV will drop itself. And while you do win on those covered calls, you are going to lose because you are a shareholder and you have long equity exposure to the underlying. So we're going to be watching this ETF very closely over the next week or so, the next few months. It's a very interesting ETF in my opinion. It's been paying out high distributions. Not too sure if it's a yield trap or not. And we can see from it's very nice that they have this supplemental tax information. Not a lot of other ETF issuers provide this. It's very good to know what your tax treatment is going to look like for your distributions. So we can see that pretty much all of it is going to be return of capital, about 99%. This is good to know for a lot of investors that you're not really going to have to pay taxes immediately on these distributions because it's a return of capital tax classification. And that's the case for a lot of ETFs, especially ones that have covered calls, because when the share price runs up for Bitcoin, in this case from September 2024 to October 2nd, we've seen a net gain. That means that those covered calls are going to be in the money and technically they're going to be losing on those covered calls. But because it's on IBIT and because we do want the underlyings to rise, that's going to do good for these ETFs. It's going to be an unrealized gain. So in order to pay out those distributions, they are going to have to do quote unquote return of capital. And that's why we're seeing 99% of it being return of capital. The other 1% is probably due to holding some treasuries, as it does hold some treasuries. If we take a look at the holdings, when it's holding cash, it's just going to be simple treasury bills and its holdings. So this is a very interesting ETF. I'm not sure what you guys think of it. Let me know down in the comments. But this is one of the first ETFs from this ETF issuer. It's going to be the suite called Income Blast ETFs. They only have BITK out right now. So it's going to be interesting to see what they're going to release. They're possibly going to release one on the SPY as well as the NASDAQ indexes if they're doing one on Bitcoin. That's going to be probably the most reasonable ETFs we can expect from this issuer. And scrolling down on this fund, we can see they have a huge disclaimer of the risks investing in the fund. And of course, we're going to have the covered call risks, which basically gives up the opportunity to benefit from value increases in the underlying security. In this case, it's going to be Bitcoin, when the underlying rises above the strike price of the sold call options. But of course, with covered call ETFs, you're going to continue to have all of the downside risk if the underlying declines in share price. And the premiums received from the options is not going to be sufficient to offset any losses sustained from those price declines. That is going to be the case with any covered call ETF. Then, of course, you have the options risks. It's an actively managed ETF, and the market conditions may cause the share price to be volatile. And then, of course, you have, more specifically, the 0 days to expiry options risk. which means it's going to be more sensitive to sudden price movements and market volatility than options with more time until expiration. But I do like the 0 days to expiry options strategy. You're not holding anything overnight. It's not going to be stressful. Every day is going to be a new day to trade options. And in that case, it's going to be very favorable for a lot of investors. But scrolling down, you do have a ton of disclaimers, a lot of risks, and it's very good that they are outlining all of these risks because a lot of other ETF issuers do not display this information enough, and a lot of people are getting into very risky investments. Now, with all of these disclaimers, it would be nice to show kind of what their underlying strategy is, how they're choosing the strike prices. It seems this fund page is pretty much a big disclaimer, which is very good, but also very scary and can scare off a lot of investors, which is why a lot of ETF issuers remove this risk statement from the main page. Now, if we're going to look into other competitors to Bitcoin Covered Call ETFs, the first one that comes to mind is going to be BTCI, the NEOS High Income ETF, Bitcoin ETF. This one, you're going to see good share price appreciation. It's going to be a little bit lower of a dividend yield. As we can see, it's only going to be about 25 to 30% yield compared to BITK, which was a 100% plus yield, which is absolutely insane. And that one also paid out weekly. This one is only going to be paying out monthly, but it's going to be, in my opinion, a little bit more stable. It's going to mimic the price of Bitcoin a little bit better, and there's room for capital appreciation. Now, some other ones is going to be YBTC. Now, this one does pay out weekly, but it has a distribution rate of 50%. And if we take a look at the share price, it's been doing pretty okay. It's been pretty stable, in my opinion. But if BITK has all of these properties, pays out weekly, has more than double this dividend yield, and has a stable NAV, that would be the better choice. So we will have to closely monitor the NAV of BITK from the period from September 24 to October 2nd. That was a huge share price increase, and it's very interesting to see how stable the NAV can be, as well as, and is there any room for any upside growth? So let me know down in the comments, are you guys buying or watching this ETF? It is very new. Let me know down below.